Thank you, and good afternoon, ladies and gentlemen. We'll walk through a couple of forward-looking statement slides. We're mostly about copper, also about zinc and cobalt. So obviously those metals are essential for a green alternative energy and electric battery and electric vehicle space. So that's what's really driving the demand side. We've got outlined 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million ounces of precious metals, gold as gold equivalent precious metals, and 77 million pounds of cobalt. These are in the Ambler Mining District. We are focused on advancing two projects. The Arctic project is the more advanced of the two, currently working on the feasibility study. Very robust project, $1.4 billion NPV, post-tax NPV, 8% discount rate. That's based on the pre-feasibility results. And you can see why. The grade there is just nothing less than spectacular as an open pit mine. So 43 million tons of 5% copper equivalent in an open pit. Bornite we're still exploring. It's a significantly larger size, bigger scale project because of its geology. So I'll walk you through both of these projects and how we plan to get to the end game. We're located in northwestern Alaska. This part of Alaska is, the economics here is really driven by the Red Dog mine. It's been in operation for 30 years. It is owned by NANA Regional Corporation. So we formed a business partnership with NANA by combining our land ownership in the Ambler Mining District. We've had a good working relationship with NANA for the last 7 or 8 years. We are also partnered with the Alaska Industrial Development Export Authority. This is essentially a state-owned development bank. Their job is to build infrastructure in the state. Obviously, Alaska is somewhat lacking in infrastructure. They built and own and operate the Red Dog mine, the Red Dog Road and the port facility there to support the mine. We've been working with ADA for the last 5 years to develop a road between the Ambler Mining District and the existing infrastructure in the state of Alaska. So that project is underway. It's currently being permitted with the draft EIS scheduled for March and the EIS and record decision by the end of the year. ADA would finance this project by issuing bonds, state-backed bonds that would be issued to private bondholders. That money then pays for construction of the road. We then would pay a toll to use the road. The big advantage here is that we can get to a year-round port in Anchorage. By hauling our concentrates in these nice little boxes here down to Fairbanks and then switching over to the Alaska Railroad, also owned by the state of Alaska, to get down to the port of Anchorage, an existing port with the overhead cranes where we can load the concentrate boxes directly into the ship hold. So no other infrastructure necessary to build out this project. The road's underway, and we'll continue to look forward to working with ADA to get that road permitted next year. Meanwhile, just quickly on our share structure, 131 million shares outstanding. We have about $30 million in the bank, I think I skipped a slide there. Yeah, South32. We have a business arrangement with South32, the 3-year option. They pay us $10 million a year. We use that money to explore the Bornite project, so the earlier stage exploration project. That's been well underway. So the last year of the option agreement is 2019. At the end of the option, they can exercise the right to form a 50-50 JV with us by contributing $150 million. So that's our business relationship with South32. Now our share capital structure: 131 million shares outstanding, $30 million in the bank, no debt. You can see our roster of shareholders there includes South32 and mostly New York-based funds. We have some shareholders here in London and some in Hong Kong as well. We'll end next year with about the same amount of money as we have this year. We'll get $10 million in warrants. We'll spend about $5 to $6 million on our exploration program next year, plus the $10 million we'll spend at Bornite. So we'll have a very active year next year as well. So let's get into the assets. This is the Arctic deposits. It is in the middle of this polymetallic volcanogenic massive sulfide belt that's about 100 kilometers in length. We'll talk about Bornite in a second. The Arctic deposit is nothing less than spectacular. 43 million tons of 5% copper equivalent. That's over 2% copper, 3% zinc, a little bit of lead in the precious metals. It sits in a geometry such that can be mined with an open pit. Our mine plan includes a 50 million ton pre-strip that's capitalized so that you get down to those multiple layers of massive sulfide, high-grade massive sulfide ores. We envision a 10,000 ton per day operation, producing about 160 million pounds of copper, 200 million pounds of zinc, 30 million pounds of lead, 3 million ounces of silver, and 30,000 ounces of gold. Capital costs about $780 million. In addition to that, you have about $65 million in sustaining and $65 million in closure costs. You're producing copper for 15 cents a pound, net of the byproduct credits. That'd be your CU1 cost, and then your all-in sustaining costs would be about 63 cents. That's your initial capital, your sustaining capital, closure costs, and royalties. You're generating a huge amount of cash flow here, which is why you have this, obviously this huge NPV, 1.4 billion post-tax NPV at an 8% discount rate and a 33% rate of return. You're generating about $450 million in free cash flow a year, which is why you can pay this thing off in 2 years at a $3 copper price. At a $2 copper price, the payback is 3 years. So this is a very robust project. We're starting to think about permitting this project as we complete the feasibility study. We only need one federal permit. It's the 404 permit from the U.S. Army Corps of Engineers. We have about 100 acres of wetlands disturbance. You can see our mine is located at the very head of a valley on top of a mountain, so we have very little wetlands disturbance. Most of the permits we need will be coming from the state of Alaska, which generally has been a very pro-development state, and we don't really see any issues with any of the state permits. So we'll embark on that later next year. So that's Arctic. It's located in the center of this belt. Obviously, we've got 30 some other known massive sulfide occurrences there, and we will continue to explore that. We'll probably do some exploration work this summer. Meanwhile, 20 miles away over at Bornite, we've been very busy spending our partners' money. Before they showed up, we had outlined in an open pit scenario how about 125 million tons of 1% copper. Then down dip at higher grade cutoff, 1.5% cutoff, we had 58 million tons of almost 3% copper. With South 32's money, we drilled a total of 25 holes in 2017 and 2018 this year. We'll add now, these holes will be incorporated into a resource update that will increase that 6 billion pounds of copper and 77 million pounds of cobalt resource. You can see where the blue dots are located here, where the drilling has basically expanded that whole zone to the north and east. And then we've done a little bit of expansion on the open pit mineralization where the lion's share of the dots are there. So we'll have we'll update this current resource again, which is 6 billion pounds of copper and 77 million pounds of cobalt in this area here. We've released some drill results already that include 16 meters of 5% copper and 0.2 cobalt. So that's a fantastic infill hole that'll continue to expand that. This is probably the most important slide in the deck. High quality copper assets are pretty few and far between, as they are for base metals in general. The two real peer comparators that we used to compare ourselves to were the Timok, Nevsun's Timok project in Serbia, and Arizona Mining's Taylor asset in Arizona. The Chinese bought Timok for $1.4 billion, and our partner South 32 bought Arizona Mining for 1.6. We think that's our destiny. We've got a great relationship with South 32, but we're explorers, not mine builders and not mine developers. So I wouldn't be surprised to see that our market cap approach that NAV takeout valuation that South 32 will exercise the right not only to buy the 50%, but probably want to buy the whole thing too. I have 30 seconds left, so I'll stop there. And we're in booth, Pat, what's our booth number? D something. We're over in that corner, D something. So, or just catch Pat and I. Pat Donnelly's over here. Happy to answer any of your questions. So thanks very much.